Today's selling in the markets was stimulated by the Chicago manufacturing figures being lower than expected. This also illustrated that the Dow is having a hard time getting up through this resistance level. As long as the Dow stays in this sideways trend without breaking out, it puts the investor sentiment in a stage where it's not convincing yet to the upside, yet not convincing to the downside, making each individual news item that much more reactive in the market indexes. Until the Dow can break up through this level, even though it's still trading above the T line, we still have to be on our defenses here that maybe the next wave to the downside could be in progress. The NASDAQ, though, did a J-hook pattern that broke it out through this resistance level. And as you can see, it's still using the T-line as support. And today, with it trading back up toward the top of the trading range, told us that there wasn't a whole lot of bearish pressure yet on the NASDAQ. Again, that was kind of revealed by the fact that once they broke out through this level, they're now more in a bullish mode. The same scenario could be applied to the analysis of the S&P 500. When it broke through this upper resistance level and did so with a gap up, notice on the pullbacks, it continues to use the T-line as a support, still indicating that this uptrend has more strength in it because it did break out through this level. Knowing that there hasn't been a major change of investor sentiment in the overall markets allows the candlestick investor to identify the strong reversal signals like the cradle pattern. Cradle patterns are easy to identify. There's the headboard. There's the bed, which is usually a series of dojis or indecisive trading days, and then the footboard. In this case, you had a 2+2 analysis in the fact that not only did you have a reversal signal setting up that closed right on the T-line, a positive open told us two things. One, it was confirming the reversal pattern, and two, it was telling us that the T-line was not going to act as resistance. Our first logical target is here. Second logical target is up here. Maintaining positions is also easy. Notice that our fry pan bottom breakout was done with a best friend signal, a doji gap up. It consolidated yesterday. Notice where it consolidated to, right back to the T-line, telling us we still wanted to stay long because it wasn't closing below the T-line, which allowed us to participate in this price move today. The same analysis could be applied to our positioning in CVLT. Fry pan bottom, a doji right at the breakout level. Doji rule, if it opens positive, it's going to trade positive. Giving you kind of a doji sandwich. Even though it backed off today, notice where it backed off to, the 3T line, which tells us not only are we still above the T line, but we're still using the 3T line as support. The assumption is there is more upside. Very simple rules can be applied to the analysis of what happens in human nature. And when you add the T-line to that confirmation of a pattern, it dramatically improves the probabilities that you're in the right place at the right time. It is not unusual on any given day that if you have a portfolio of whatever you decided your portfolio number will be, such as 10 positions, it's not unusual that you might have 7 or 8 positions moving in the right direction, with 1 or 2 positions either getting ready to reverse or at least consolidating. But the whole point of candlestick analysis is to analyze where you want to put your funds where the probabilities are dramatically in your favor. That'll be it. We'll see you in the chat rooms.